Ouch. This is really bad. Semiconductors just printed a weekly lower low, and so did the NASDAQ. In this case, we're looking at SMH, which is for semiconductors, down by 2.3% on the day. The other reason why I don't like this is because it looks like we just rejected off the 50 DMA, which will usually mean we're going to make progress closer to the 200 DMA, which is 30 points lower. So, what is happening today? The NASDAQ falls by 1% as Nvidia's hit before earnings. Markets wrap. Traders gearing up for Nvidia's results, key inflation data. There's some interesting parts in here, which we'll try to come back to a little bit later in the show. But specifically, the market actually got more greedy today, from 52 on Friday to 54 today. And if we look to where the blood is, well, other than Tesla, it's pretty obvious. It's over here in semiconductors. And we have to now look at the economic data. Whoa, whoa, whoa. All right, Jerome, let's have a look. Because Nvidia actually reports earnings on Wednesday after the bell. So we're going to trade tomorrow. We're going to trade on Wednesday. Then it's all about Nvidia. On Tuesday, which is tomorrow, we have consumer confidence coming out at 10 a.m. What I really want to remind you of is that if we look here to higher timeframes for SMH, we're now red on the month. On the week, hey, we got evidence that now we're wrong. This could turn into a failed breakdown, but if we look to QQQ, weekly lower low as well. And QQQ is battling for its 50 DMA after it stopped going up. These are the doldrums of summer. There's usually not very high volume, but we just want to be very mindful of what could happen. Because on the weekend, what we talked about was that, hey, we could actually have a double top here. Is there evidence? Well, let's have a look. Today's high is, what's going on here? I want my big arrow. All-time high is at 565.16. Our high today, 563.91. Hey, I would probably call that close enough. That's probably close enough. Other thing we want to look at here is that this is where the double top we're looking at would come from. These would be the two highs, which are basically rejecting. One more piece of evidence here. Well, we got over the candle high, but we're not currently over the previous high. That's a failed breakout. So make it really simple for me because you've shown me a lot of charts and I'm getting a little bit confused. All right, let's do it. So for SMH, if we were going to print, I'll go through these charts really fast. And I just want to show you that we're getting some conflicting signals. So if we're looking for a head and shoulders pattern on SMH, this is what it would look like. As of right now, we're resting over support or the green line, which is our previous all-time high. To make this really simple, Nvidia, when they report, the earnings implied move is roughly 10%. Let's get that into perspective because that would mean from today's closing price of roughly 126.50, we're looking for either 114 or 139. Whoa, 139. Yeah, that's basically back up here to all-time highs. So whatever happens into the end of the month, like we talked about yesterday, oh boy, there's going to be a big move. 114. Why do I keep going back? 114 would be roughly back down here to our 61% Fibonacci retracement, a mathematical number, which would be below the 50 DMA. That's going to drag down SMH and QQQ even more. We have an engulfing candle today, and we're going to stop going up. So whatever Nvidia does on Wednesday going into Thursday, again, that's the key part, Wednesday night going into Thursday, we're likely going to move massively. Look at the move from last earnings. Whoa, massively to the upside. That's correct. And from the closing price pre-earnings to where we are now, roughly a 34% gain. That's huge, right? We've rallied by roughly $1 trillion. Whoa, right? This stock moves. So what I'm really showing you is that when we look at higher timeframes, right now, Nvidia is not broken. It's other chips. That's what's going down. So for SMH, because we have this failed breakdown, a failed breakdown means that we fail, but we fail to hold the break. That's a failed breakdown. Right here, that's what we have, failed breakdown. On the S&P, we have a failed breakout. We went higher than the previous candle, and then we fell back below. That's all it is. It's really simple. So over here, we don't want to go lower. If we go lower, we're likely going to be below our previous all-time high. That's bad if you're bullish. And like I just told you, we're likely going to be rejecting off the short-term price or the 50 MA and may progress closer to some kind of inverse head and shoulders or potentially all the way back down to our 200 DMA. That would not be fun. It would be a repeat of last time. And for the NASDAQ, like I also just showed you, if we go back below last week's low, 473.37, well, we're going to be below our 50 DMA. That's here at 470.465. So, all right, if these charts keep printing daily lower lows, we're also going to be doing one really important thing. Just before we cover that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. Thank you very much ahead of time. If we get daily lower lows with lower highs and lower lows, and we close red, to make it really simple, because we're closing so close to our 50 DMA, we're likely going to be getting candle closes below the 50. That's not good. It can mean a trend change. Look what happens after these two bars last time. Down, it can't bounce, reject. We don't want to close below the 50. So now I've shown you a lot of evidence, and let's have a look here, right? There's a crescendo of volume. So sell in May and go away, come back on Labor Day. Well, that's next Tuesday. We're going to get volume coming in September. It's not going to stay where it is right now. All right, so now we understand why these charts are important. Hey, the S&P looks fine because there's other things that are moving under the surface. Look at RSP, new all-time high. It closed down by 3 cents today, technically red, but the Russell closed green, the Dow Jones closed green. So there are things moving out there, notably for some ETFs outside of these ones you're normally tracking. Brazil's up, financials are up. New all-time high record close for financials. Boom, there's the bulls. Looking over here to utilities. Hey, new record close, new all-time high. Look at those bulls flex. Yes, that's the S&P. Look at energy. Not an all-time high, but up by about 0.1% today. 1% today, 0.9. There was tension over in the Middle East, so oil was up today. But if we look just at tech, like the headline tells us today, yeah, tech got hit ahead of earnings for Nvidia. So the really good thing, if you remember what we talked about last week as well, I said, I'm not thrilled about the size move that we've had going into Nvidia's earnings because it's a 34% rocket ship straight up. And from our recent low, there hasn't been much of a pause or indigestion. We kind of saw that happen here on Thursday, bearish engulfing candle closing below the low, inside bar. Now we have an engulfing candle, but not quite closing below. So what does this mean? It means we're finally getting some sideways action. Here we were going sideways, right? Sideways, break out to a new all-time high, going sideways, break the range to go lower. And now we have a really small box right here. This is either going to turn into some kind of cup and handle, or we ultimately go higher, new all-time highs, or it's going to be a fizzle, and we're going to go down from here. We just stopped going up. So what does all this mean? Because, again, you're showing me a lot of charts. You're telling me a lot of stuff. All it means is that right now, positioning is really important. If people bought the gap down and now they're going to wuss out before earnings, yeah, people are taking some profit before earnings. It's the wise thing to do. Take some chips off the table. Traders are gearing up for Nvidia. Okay. Magnificent 7 are down by 1.2% today. And then if we look across the board, blah, 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 hovering near all-time highs, Powell sealed the deal for a cut, but are cuts bullish? Hey, a lot of people are asking. Estimated there's going to be 17. One more thing here that I thought was important was this. Strong flows for corporate buybacks, systemically fund, and retail investors are expected to push stocks higher in the coming weeks. Well, that doesn't sound bullish to me. I'm just joking. It does sound bullish. So let's get through the rest of this data because I think I summarized things really well on the weekend. I think people are taking some profit ahead of earnings. Let's look at year to date. Why? It's been an absolute, it's been a firestorm. Let's look over here to one particular fund that I track. This is a hedge fund manager. His name's Stanley Druckenmiller. Used to run George Soros's family office. Let's look to his Nvidia holding because he's up by 600%, but he's trimmed an additional 87% to have an active holding of roughly 0.9% or weight to his portfolio, which means it's not that he's bearish on Nvidia. He's just reducing it to a can't lose position. Hey, that sounds like a smart investor to me. And that's likely what at least a few people are doing. If we look back to the weekend, we know that we got consumer confidence coming out tomorrow. On Thursday, we got GDP coming up here to 2.8. Hey, this is supposed to be it's not a preliminary print. We got a revision to Q3 for today, but if we look back to Q2, it was 2.6. I think anything over 2 is welcome. It shows a soft landing. And if we look forward to PCE coming out on Friday, do we have a preview for that number? Do we have it? Let's see. Oh my goodness, we do. So, all right, might be a little bit of a bumpy road into Friday. Let's look and see what this looks like here. So, here we go. So European CPI is going to come down to 2.2. The US's PCE is going to rise to 2.7. Is that a bump along the road? Because Jerome basically said we're going to be getting cut in September. I think if it comes in at 0.2 and we get 2.7, they would call that a bump in the road. So what would they do? They'd probably cut 1 times 25. That would be my gut feeling on it. Why? Because then that way they're not getting ahead of it, but they're starting the process of cuts. So to make this really simple, let me just go back a couple slides here. This is going to come out. I didn't see the number until just now, so it's great to see. Monthly progress is good. But remember, this is a cumulative number. And on the weekend, we showed how we can choose to slice the data however we want. If we use a 3-month trailing average, we're currently at 2.1 for the PCE. The Fed can explain away the number to whatever they want it to be. Right now, they're calling it a bump in the road. So, hey, it looks like a bump in the road. Stonks are up a lot so far this year. Last thing to remember, too, is that here we go. 2.1 is the current 3-month basis core PCE, blah, 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 right? The Fed's going to pick the number they want. History's on our side if we're bulls. We got an 80% chance of being higher or an 82% chance of being higher. Hey, I like those odds. Let's see where we are on Friday, if this is going to be a bump or if it's going to be more. And then finally, there is earnings like I talked about for Nvidia coming out on Wednesday. That'll be really important. We're currently expecting an 11% beat for this quarter. The guidance will be really important. I'm expecting that to be a beat. So to bring you back to the story now, some charts are failing and we're seeing new leadership emerge. This is not the leadership I would expect. I don't want to see equal weight leading the charge. I'm happy to see them in new all-time highs, but what I really want to see is SMH and QQQ continue the march to new all-time highs. Why? Because these are our leaders, and if they're not going to help us, they can't hurt us then. Apple's going to reveal their new device on September 10th. Hey, we need this one to show up, but we also need these not to drag us down. When these stocks go down, the market goes down. Let's be honest. So whatever Nvidia reports, for better, like 139, or for worse, like 114, this is going to be the market moving event. That's my opinion. And if it is 1995, let's remind ourselves of that evidence. So it's nice to see the broadening out, which a lot of people are talking about today. Here's a simple chart. If we look here to the gap between mega caps and other stocks in the S&P 500, it's shrinking. Here we see that we're now going to be going to, excluding Magnificent Seven, net income growth. We're looking for 7% going into the second quarter of this year. That is fantastic. And when it comes to cutting rates, here you go, out today, hot off the press. We got the Dove. Fed's Daly agrees with Powell's view that it's time to cut rates. All right, that's it. Time to seal the deal. Let's do it. So if we just remind ourselves that as of right now, the Fed is beginning the process of cutting cuts. And the number that we're likely going to see on Friday, which is core PCE, is going to be going up to 2.7. I honestly don't want to see the Fed cut by 50. Why? It doesn't show they're in a position of strength. We want them to cut because they're able to, not because they have to. Over here, because they're able to, hey, that's a 25 right now. That's a 25 later. Let me remind you of when they meet. They meet 3 times between now and end of the year. They meet September 18th, November 7th, and December 18th with 2 SCPs. So if they're able to cut now, cut in November, cut in December, that's 3 cuts versus, oh my God, the market's tanking. We have to cut right now. I don't want this one. And to make it super, super, super obvious, again, please watch the weekend video. But what we're basically looking for is whether the Fed is cutting because they're able to. That would be here at 1995. Sorry, let's look at this one here. If they cut because they have to, it likely means they broke something. That's why we see the biggest declines after the Fed's pivot. So -30 to -60%. Hey, that doesn't sound pretty. But this here is basically ignored because they cut because they were able to. So 25 good, 50 bad. For more information, watch the video on the left or come hang out with me at 9:15 a.m. tomorrow. Thanks.